VA loans can be confusing, and there's a lot of questions and misconceptions flying around out there about them. And a VA loan has a ton of benefits to offer you as a home buyer, as long as you're able to get one. So today, I'm going to go over the basics of VA loans, and by the time I'm done, you should have a pretty good idea whether or not a VA loan is for you, and if so, how to get started on the process of buying your next home with a VA loan. And stay tuned till the end, because I have a free bonus for you that you won't want to miss. Hi there, I'm Stephanie Frost, a real estate agent in Ocala, Florida. And I'm here every Tuesday to talk about all things real estate in the Ocala and Marion County, Florida area. First of all, what is a VA loan? Well, basically it's a mortgage offered through the U.S. Department of Veterans Affairs program that's available to active and veteran service personnel and their surviving spouses. It's not issued by the VA though, even though it's backed by the federal government. It's only issued through private lenders, and just because it's a VA loan, it doesn't mean that all lenders are going to offer you the same terms and the same lender fees, so it's going to pay to shop around. And you're not automatically eligible for a VA loan just because you've served. There are some basic requirements in order to get one. They vary by the years that you've served, but the basic requirements are if you've served 90 consecutive days of active service during wartime, or 181 days of active service during peacetime, or if you've had 6 years of service in the National Guard or Reserves, or if you're the spouse of a service member who has died in the line of duty or as a result of a service-related disability. You will need your certificate of eligibility in order to show your lender that you are eligible to get a VA loan. You can get your COE yourself from your Veterans ePortal, or some VA lenders are going to be able to get it for you. In a few cases, you're going to have to provide some documentation to the VA yourself before they're going to give it to you. So be aware that it can take some time and legwork on your part. Some of the additional documentation that you might need would be your DD-214 if you're a veteran or a current or former activated National Guard or Reserve member. If you're active duty, you're going to need a statement of service signed by your commander, adjutant, or personnel officer, showing your full name, your social security number, your date of birth, the date you entered duty, the duration of any lost time, and the name of the command providing the information. If you're a current member of the National Guard or Reserves and have never been activated, you're going to need that plus your total number of creditable years of service. Again, you're going to need at least 6. Now, it can take up to 6 weeks to get your COE in some cases, so you'll probably want to start the process before you actually start shopping for a home. So what are the benefits to using a VA loan instead of some other kind of loan? Well, obviously, the biggest benefit of the VA loan is that you don't need a down payment and you're not going to have to pay PMI. Now, with most types of home loans, you have to pay at least some kind of down payment. And if the down payment's less than 20% of the purchase price, you generally have to pay PMI, which is private mortgage insurance. But with a VA loan, that's not necessary. With a very few exceptions, most borrowers are going to have to pay a one-time VA funding fee at closing, but that gets rolled into your loan amount, so you're not going to have to pay it out of pocket. And the funding fee varies from 2.3 to 3.6% of your loan amount, and the cost of the fee is determined by your type of service, the size of your down payment, whether or not it's the first time you're getting a VA loan, and whether you're buying or refinancing the property. So yeah, you can use a VA loan to refinance a property too. VA loans are only for primary residences though, so you can only use them for a home that you're actually going to be living in and not an investment property. You can, however, buy a duplex or even a quadruplex as long as you live in one of the units. You're going to need to move into the home within 60 days of purchase, and you're going to be asked to sign a document at closing stating that you plan to live in the home for at least 1 year after closing. So, no fudging. Another really handy little benefit is that VA loans typically have a lower interest rate than other types of loans. So even if you have money for a down payment and don't need a zero down mortgage, it might be to your benefit to go with a VA loan anyway, rather than another type of loan. And generally speaking, debt-to-income ratios and credit requirements are a tad more lenient with VA loans than they are with other types of loans. So even if you don't qualify for some other loan programs, you might still be able to get a VA loan. And your VA loan is a lifetime benefit, so you can use it over and over. You can even have more than one VA loan at a time, but that gets a little complicated, so we're not going to go into that today. Now, the last thing you need to know is that even if you're eligible for VA financing, the home that you're buying has to pass muster too. There are some requirements it has to pass in order to be eligible for VA financing. Basically, the home has to be in livable or move-in ready condition. So if you're planning on buying a fixer with some serious damage, it's probably not going to qualify for VA financing. So now you know a little bit more about VA loans and hopefully whether or not a VA loan is right for you. And if you're thinking about buying a home using VA financing, click on the link in the description below to get my free guide to VA financing. And remember to like and subscribe because I do this every week and you don't want to miss anything.